Good evening and welcome to the Mint edition of Pivot and Perish. COVID-19 pandemic has presented a massive opportunity for the fintech industry, both for the online and for the transaction industry. Globally, it's said that the transaction value for digital payments is expected to be as high as $12.4 trillion dollars by 2025. And India is expected to contribute nearly 2.2%. So clearly, India is one of the fastest growing countries in the world in terms of digital payments. And clearly, it is also attracting a lot of investments from private equity players, venture capital firms, and other international payment firms. So in this edition of Livemint's Pivot or Perish series, we turn our focus to the fintech ecosystem and whether it's ready to support the economic revival of the nation in the new normal. My name is Gopika Gopakumar, and I have with me Romita Majumdar, who will be moderating this panel discussion along with me. So without any further ado, let me introduce our panelists for the evening. We have Sameer Nigam, founder and CEO of PhonePe; Naveen Surya. Hi, Sameer. Naveen Surya, Chairman, FinTech Convergence Council and Chairman Emeritus, PCI. Hi, Naveen. Also, we have Srinivas Nidangadi, Senior VP and COO, Mobile Financial Solutions at Comviva. Hi, Srinivas. Welcome to the show. We also have Shilpa Mankar Aluwalia, Partner FinTech from Shardul Amarchand Mangaldas. Hi, Shilpa. We have Harshil Mathur, CEO Razorpay. Hi. And we have Toby of Vice President and Head of Innovations and Customer Solutions at Asia Pacific MasterCard. Welcome all of you to the evening's panel discussion. It's a pleasure to have all of you. So without further ado, let me get started. So clearly, we are all in a very uncertain and challenging situation. The pandemic has significantly changed the way in which consumers and business do payment. More number of users are now opting for contactless and mobile payment solutions. In fact, the data itself shows that the UPI transactions touched a record high in June. So how has COVID or the pandemic really impacted the expansion of digital payment ecosystem in India? We saw that the demonetization was a trigger. COVID has just given the bigger boost for that. So let me start off with Sameer. Sameer, let me start off with you. What is that big impact that you're seeing in terms of the digital payment ecosystem?
So I think two quick parts to it. One was, like you mentioned, demonetization and then COVID both have been accelerants in terms of new users adopting digital payments for the first time. That started with the first lockdown. We saw a very, very large spike in organic consumer adoption, especially for categories like recharges or peer-to-peer money transfer, because people were locked up at home for almost 40 days. People had no other means to actually pay for their recharges, their bills, their DTH. So that definitely for the category was helpful. Overall, at an economy level, we saw a very, very clear V-shape. Offline transactions, e-commerce transactions had come to near zero during the first 2 months of the lockdown. But recovery, especially in tier 2 and beyond, where COVID impact has not been as bad, thank God, has been better than expected. In fact, last month was, at least for us, our biggest month on the back of UPI growth as well. And we actually crossed now, we are on a 200 billion plus annualized TPV run rate. So we crossed a very large milestone. And these numbers are about 30-35% larger than where we were pre-COVID, as recently as Feb of this year. So I think at an industry level, we have very little room to complain, to be honest. We are one of the few unscathed industries. But obviously, when I look at categories, e-commerce, taxi cabs, restaurants, I mean, there's carnage, and I'm hoping that things get better from here.
Yeah. Well, let me turn to Harshil now. Harshil, I mean, from Razorpay, it's an online payment gateway provider. Razorpay claims to have a 35% monthly growth rate. How has COVID impacted that growth and your business plans?
Yeah, no, thanks. Thanks for inviting me. I think, of course, the first month of lockdown was bad for everyone, including us, because everything was shut, including e-commerce, including even grocery, because supply chains was disrupted. But as Samir pointed out, there was a sharp V-shaped recovery, and especially in online payments, the recovery was really rapid because segments like e-commerce exceeded pre-COVID levels, grocery exceeded pre-COVID levels, edtech, bill payments, gaming, and a lot of other segments exceeded pre-COVID levels. And that's why, like, after the first 1.5 month of lockdown, we saw we were trending almost back to pre-COVID levels, and after that, we've seen a strong recovery in certain segments, which has led to today we are at least 30 to 35% higher on a month-on-month basis compared to pre-COVID levels, simply because of these certain segments which are booming a lot. And one of the indicators that are not, it's not just volumes happening higher; it's a lot of new customers coming online. One of the indicators of that is bill payments. Bill payments right now are tracking at about 180, 190% compared to pre-COVID levels. And it's not that people are generating more bills, but bill payment is generally one of the first things that people learn how to pay online. The transition always starts with learning how to pay bills online or buying tickets online, and then people learn how to do commerce online, and then people learn how to do gaming, stockbroking, and other things. So bill payment is generally one of the first segments people learn when they go through digitization. So a higher tracking on bill payments is generally a very positive indicator of digitization, which just shows that a new chunk of population has come online, which will transact on other mediums like e-commerce, grocery, and everything else as well, which is very exciting news for us.
Great. So let me turn to Toby. I mean, PhonePe and Razorpay clearly are inching way ahead. How does it look for MasterCard? How are you adapting to this new normal? Clearly, credit card transactions have fallen, but how are you adapting to this new normal and this uncertainty?
Yeah, absolutely. And I think we heard a couple of the kind of new normal already, right? When we look at both the online transactions growing, I think that's definitely a trend we see, but we also see how consumers are modifying their in-store behavior now that they're kind of coming out of lockdowns across the region and including in India. And that's where we see trends like contactless growing significantly as a preferred method of payment. And I think what we generally see is actually this kind of new behavior. I think people are just generally more open to trying new things that are digital. More touchless experiences are emerging. Merchants are experimenting with new ways of payment. It's digitizing of menus. It's digitizing much more than just doing the payment. And so those kind of trends are really significant drivers, I think, of the future. And I think when I look back even at my own life, right, you kind of look at how long does it take to create a new habit? And actually the average is like 66 days. It can last up to 254 days. And I probably should have a bit better fitness habit at this stage. But ultimately, I think this is kind of a much longer duration that we probably ever seen in kind of this digitization where people really have repeated experiences. And that's when we see this repeated experience of contactless, repeated experiences on online transactions. We see that type of recovery. We see growth in those areas. And of course, things that are impacting right now are things like travel, hotels, food and restaurants, taxis. But I think we just need to look at ourselves, right? I think we're all itching to get out of our house. So these are not going to be long-term impacts, right? People will want to come back to travel when it's safe again, when it's safe for their families and everyone around them. They want to interact. People are social, right? And so we will continue to see that recovery. So we're in a normalization stage right now, and we're going to see kind of a road to recovery pretty quickly. And I think we will see many of these learned behaviors like e-commerce, contactless, stick with consumers as they come out of this recovery, into this recovery phase, mainly because it's become a habit, right? It's been seen to be more convenient and more impactful than the traditional way of doing things.
Like how Toby said, clearly it has hit some of the major industries like hospitality, aviation, auto, manufacturing. And this has in turn affected the digital payments as well, which are closely linked to these sectors. So did the pandemic really bring about any specific challenges that perhaps you weren't expecting earlier? Well, let me throw this question to Samir.
Sorry, could you repeat the last part of that question?
Some challenges that pandemic threw up, which you weren't expecting, and then you had to somehow cope up.
So I think one at an industry level, one of the things that happens anytime any kind of digital activity really surges is that the risk and fraud profiles sort of change. And I think one of the things that we are seeing in the market right now is digital payments, increase in risk and fraud activity, and the regulator and the industry are working closely. So I think a lot of new customers getting on digital payments, and therefore we have to make sure that we protect everyone. And I think the second one was how difficult it is to service merchants who are getting back into the market in terms of their acceptance, because a lot of stores particularly have been shut for 3 or 4 months, and migrant workers who are coming back, the small shops, they're trying to get their business back on the ground, and they're asking us how we can help them beyond just enablement of payments. And I think that's been a struggle because the industry is not being able to sort of play a very meaningful role in getting people's business off the ground yet again. And I think those are the two areas where we are focused on right now.
That gives me a cue to go to Srinivas. Srinivas has a wide experience, has had wide experience across industries like banks, payments, commerce. In fact, he set up the entire mobile banking payment system at ICICI Bank. So Srinivas, coming to you, you have dealt with some of these issues in your various roles. Did you expect, did the pandemic throw up any challenges that perhaps was not expected earlier?
Yeah, I mean, I think more than challenges, I would say, because of the industry of electronic stroke digital payments, it's about really trying to figure out how do you get the consumer behavior shifted as fast as you can. And thankfully, people didn't have a choice. So I believe it's about really taking opportunities and ensuring you're kind of making those tweaks and getting people to get to use these digital payments and systems is the way I would look at it. And while everybody talked about it, when business tanked, there's no way payment systems could have kind of processed transactions as well. However, once look at home deliveries, how do you ensure you get the QR codes? Because a lot of times you may not remember the mobile number. So how do you send the QR codes across for people to scan and make a UPI payment, for example? So it's really about, for me, more than a challenge, thankfully for this industry, it's about have people taken cues, figuring out those small white spaces or gaps and bridging them to ensure people are kind of really starting to make those transactions. And it's very visible that, as others have mentioned, that you have a lot of new users who are coming in. So I would kind of look at it more as an opportunity.
Sure. I think Romita would like to ask the next question.
Hi. So actually, taking up from where you've spoken about a lot of new consumers coming in, that is something that we do keep hearing all the time. We see a lot of people that we know ourselves who probably had never used digital transactions in the past, and over the past few months, they have really figured out how to do these things. So I would like to understand, on the consumer side, we know that this is the extent to which people have adopted digital transactions and digital payments ecosystem. On the merchant side, what has the readiness and the sentiment been like in terms of making the investment in adopting fintech solutions, in figuring out that, especially small merchants, in terms of figuring out that they need these solutions? I would like to throw this question to Srini first, and to understand, what kind of sentiment have you seen?
So, as I mentioned earlier, and again, it's been a revelation, and I'm sure Samir could add on to this probably. But when you go to the countryside, everybody kind of has the ability now to kind of accept UPI-based transactions, and that kind of is something that I've seen. When you don't have a choice, I think people would kind of start coming in as well. But as I mentioned earlier too, it's really about ensuring that probably what you mentioned really are about the nano merchants, not even the probably somebody who's selling pots on the road. And how do you ensure that they are able to kind of are able to kind of pick up cash, and when cash is not there, how do you get the money into the bank account? And so it's pretty much explaining to them, and after a while I believe that the need is felt. So as long as you're able to quickly onboard them, I think would be the biggest challenge. How do you quickly onboard them, educate them about downloading the app where required, and ensuring that they're up and running is what I would say.
And I would actually like to invite Shilpa into the conversation now in terms of you manage you have seen a lot of companies, you've seen the entire ecosystem. In terms of the tech adoption, the level of readiness that you've seen in the ecosystem, what kind of challenges have you seen? And especially when we talk about small merchants, do you see any teething issues here which make it difficult for them to come on board? Or are there any requirements which probably will make it easier for them to just join the ecosystem?
So, when we're talking about sort of the ecosystem and the regulatory framework, I think there are two key elements. I mean, I like to view the regulatory framework as if you look at the engine that drives fintech, and then, what about the regulations will give you a smooth ride. If you look at the, on the demand side, I think the two key elements from a regulatory perspective are KYC and data protection. And KYC, I think, has been a battle that fintech has been, dealing with ever since the Supreme Court Aadhaar decision, which withdrew eKYC, and that hugely changed the dynamic of onboarding customers. And I think now the RBI, as it's moving from a light touch framework to a more heavily regulated framework, they're also looking at KYC on the merchant as well as on the customer side. And I think this does impact the whole cost dynamic. And in a COVID world where we're looking at pushing digital financial products, because essentially that solves everything we're trying to solve in COVID, right? Contactless delivery of financial goods and services. So I think the cost of customer onboarding, and if the KYC is pushed onto merchant onboarding as well, that becomes an important piece, for the regulator to think about. And this is a cost that the smaller, players, I think, find difficult to absorb. The RBI has come a long way. I mean, we do have a digital KYC framework. We also have a video KYC framework. I think the next step will be to completely remove the manual element from KYC. So you rely on, AI technology, etc., to onboard customers. But I think a cost of doing business is an important part that the regulator should think of also when coming up with a regulatory.
So one query for Toby, he's already touched upon this, but I would like to ask, in terms of bringing your small retailers into the fold, in helping them adjust to these new habits, of contactless, and maybe pushing them towards more online transactions, how have the past few months in India been like? How has the process of initiating the change been like?
Absolutely, and again, it's really a pain that the SME is facing today, right? I mean, they're losing a lot of their business. People are not shopping the same way that they have. So we recognize all the pain that these small merchants are suffering in terms of getting access to capital, in terms of digitizing themselves, something that they may have not been able to do so easily in the past. And then also creating kind of that same experience while demand is dropping at the same time. So it's a lot to deal with. So in many ways, we start, first of all, with an education part. How do we help them out in the short term? So we've made a $33 million commitment alone to India, right? 250 crores to really just kind of get out there, educate the merchants, starting even little programs like how do you properly sanitize your store? And then we start through those engagements really talking to them about like, okay, what are some methods for you to start digitizing? And that's things we really pushing for things like software-based point of sale, right? I know historically cards specifically was always reliant on a lot of hardware. So how do we push more into a software point of sale device? How do we lower the cost of KYC that we just talked about in terms of using players like from India, like Signsy, etc.? as really the fintech disruptors that help us do this more seamlessly, and really trying to build that ecosystem of fintech together with the banks, together with the networks, to really kind of solve their problems, because they're really in pain as small merchants, right? It's not an easy life before, and it's even harder now. And so really our effort is to help them along the journey. And that comes with many aspects, right? And that's also really helping them find an online presence in some cases, right? We see actually across many markets in the world that small merchants are starting to find new channels, right? This has been something they may have not explored before, but how do I sell my product online? How do I get an online gateway going, up and running, set up a little shop, maybe sell on a popular social website and platform, right? So there's many such experiences where it's about omni-channel, about enablement of their physical presence, keeping them safe and secure, making sure that they get access to capital through also kind of the digitization. And that's the opportunity that we see too, because once you start digitizing some of these SMEs, we start having a little bit more information, a little bit more data that can also help us then ultimately give them the access to maybe better lending through the ecosystem as well, because of that data that they're now able to present themselves with to a lender in the marketplace. So we think positive, but lots of things to be done at the same time.
Absolutely. I think this brings me to my next query, actually. This whole SME market, the government is taking initiatives to ensure MSMEs have ways to kind of to revive in the current scenario. And yes, there have been a lot of initiatives, but I would like to understand, especially from Harshal and Sameer here, in terms of MSMEs, we know that this is the next growth market for fintech players. But in what ways do you see you see the ecosystem engaging with MSMEs? What are the ways that you can actually bring them into the fold, and what kind of initiatives are you looking at in this space? Maybe Harshal can take the query first.
Sure. I think the Indian MSME market is significantly different than rest of the world in the sense that it is pretty broad and scattered, but at the same time, like they understand business really deeply. So when you talk about an SME in India, like in a market like US, you'll build a payment gateway, you build APIs, and people will connect with it and do online selling. In India, the SME is not that tech heavy. They don't have a CTO, they don't have a tech team. They can't do a payment gateway integration themselves. So what we really are trying to do is that we have to build a lot of software solutions built on top of the base infrastructure. For example, some of the things that we have seen is like a link-based payment system, a page-based payment system through which they can create a link, put it across Instagram, WhatsApp, Facebook, the places where they typically sell, and just go live and start selling on day one. They don't need to have a website. They don't need to have an app. And I think those kind of solutions have seen an increased usage during COVID, where we have seen even small grocery shops who are trying to sell in their neighborhood locality on WhatsApp. So they are accepting orders through WhatsApp. They want to send a link, accept payments, and be done with it. I think those kind of solutions are needed to take SMEs digital in a country like India, because you can't rely on them having tech jobs to basically integrate an API, integrate a payment gateway system, and things like that to go online. And I think, of course, QR code is one of the basic systems that has been helping that. But in the online space in particular, software solutions are the ones that are driving a lot of the adoption. I think in the next couple of years, more software solutions will emerge, which will be more full stack, like things which can help businesses manage everything from cataloging to inventory to being able to sell online into one single ecosystem where they can just plug and play and start using it. I think those kind of solutions will help digitization of SMEs in India.
Got it. Sameer, what do you think about this?
So I think lots of traction on the merchant, especially the MSME side. I think that's where you correctly said the entire industry is focused on. The silver linings first. So to Shilpa's concern around KYC, been working with a bunch of other entrepreneurs in the fintech industry with the government, and during COVID, we've actually in collaboration with NPCI and the government bodies, come out with a full solution on 100% digital KYC for consumers and merchants. It's called KYC Setu. It's in the sandbox actually, and has passed all the legal hurdles and regulatory hurdles. So it will, fingers crossed, but it's like Aadhaar or UPI, it is a made in India innovation that essentially obviates the need for video KYC, piggybacks the combination of the CKYC framework and Aadhaar, and should be very, very cheap. And I think that's very important because the regulator definitely, I think even the industry recognizes the need for stronger KYC on the merchant side and the consumer side. And I was referring to fraud. That's one of the things we're trying to get around is just knowing the customer better. So we need to then have a digital answer, and I think that's coming. That's imminent. Hopefully pre-Diwali. I think that'll open up the market. The second thing is growth solution, and I think the QR code is working really, really well for us in the heartland or in the cities for that matter. We have now over 12 million QR codes deployed. But the challenge starts, as somebody was mentioning, when you have somebody who's selling pots. They were selling pots, or they were selling, I don't know, Golgappa somewhere in the market in India. During the lockdown, that 30, 40, 50% of the merchant base went home, or they went into hiding because of the lockdown. Now that they're coming back, they're starting from scratch. And these are the folks that need the most handholding because the footfall's not come back around them. A lot of the retail outlets are looking to get online and sell online in the neighborhoods, grocers and others. Many are taking to WhatsApp, many are looking at other avenues. So things we've done, for example, we opened up chat between our consumers and our merchants. So our hyperlocal merchants, you go on the store's platform, you geotag all your local merchants, and you allow them to start sending communication. And we are seeing very, very interesting toolkits being provided by young engineers and millennials to the neighborhood to digitize their inventory. I mean, that's one of the hardest things, right? How do you actually provide your inventory in a language that your customer understands and reading? Because when we go to a shop, we suddenly break out into all of our 10,000 native languages. But when it goes online, everything is expected to be in English in large parts of the country. So many localized solutions have to be thought of, and I think that's where most of the industry is sort of focused on. All the tech players, all the fintech players are looking at that.
Gopika?
Yeah, I think Sameer's whole vision of taking fintech even to the chai wala, which is very prominent in your advertisement also. Yeah. So
I like my chai, so I have to solve for them. Moral obligation.
No, that should be the way the whole industry moves forward, right, and supports the whole economic recovery. Well, Naveen is feeling left out. Let me go to him. Clearly, being the the industry body, there are a lot of challenges.
I chose let CEOs run the show. Let me try and watch from this side.
The CEOs come to you when there are problems, when they have to go to the regulator or the government. So
today CEOs are different. They solve the problem. Anyway, yeah, go ahead. Sorry. Yeah.
Okay. No, you have to do the tough talking, or rather the skillful talking, if I could put it that way. How consumers pay, clearly that's a bone of contention now. The government has waived the MDR, and now the CBDT has come and said you cannot charge for your UPI, for the UPI transactions. So how do you think companies can monetize payment? How do you think they can make money? Is there a business model, which has emerged? Has COVID given any sudden ideas, plans?
So there are two or three fundamental things. One point which I wanted to add is that suddenly the payment industry is looking in terms of trends more like a real economy. It's for the first time, while digitization is in and there's a lot of growth for digital options, and that's where fintechs are taking benefit. But demonetization versus COVID, during demon time, the overall payment industry, I'm talking the aggregate values, right? Wholesale, clearing everything, that grew despite the economy, demand, etc., taking beating in a demon time. This is the first time, and you see the annual report of RBI, it clearly says that the payment industry also in aggregate is following more real economy because the size that it is achieved. We are actually 20% down in the first quarter after the COVID. And that's the first sign that we need to realize that while there's a lot of headroom and there are a lot of things that we have to do, and COVID is going to help us do a lot of work digital, but digital doesn't mean that it's free, right, or it is like economical. There's a lot of infrastructure that needs to be invested, right? Even for an example, if NPCI has to look at the next wave of growth, they probably have to budget at least 100 to 200 crore kind of investment in their infrastructure. So coming to specifics of issues like MDR, fundamentally, we believe that any business activity, if it is done for free in any world or anywhere, or if it is intervened or regulatory driven, free, it never works, especially in evolving in a growth phase. This is actually disastrous. And I think we have been taking that stand very clearly that we are not against helping MSME, we are not against helping merchants, but there are multiple ways to help. The prices should be always governed by the market and the competition. We should surely find a way to kind of compensate. And here the cost that you were talking about is like 50 basis point. So our original plan always to the government was that the biggest beneficiary of the digitization in terms of compliances to the tax, in terms of saving the cost of physical cash, which is like 4,000 to 5,000 crore annually, and it's growing. If you look at their balance sheet of RBI year on year, and also the cost of let's say fake notes, etc. It's again growing, frauds, etc. It's a continuous trend of growing. If you look at all that cost, if that gets reduced because of digital, and especially if you look at, so you're talking about 1% in terms of direct cost. If you talk indirect cost, if you talk about tax, etc., you can take it as high as 30 to 40%. So we've been clearly saying that if government has an agenda to help MSME, we're definitely there to support by creating better products, creating better solutions, finding probably right pricing model for different kind of customers. But really doesn't work, and they should simply provide tax incentives to kind of accommodate that. And this is a model which is globally has been working. And again, we said that there has been a discussion that if we do anything on the tech side, we waive it, then probably there is a loss of revenue. So we also gave a solution that, let's say if I'm a merchant who's doing 10 lakh worth of a business in a month, you don't have to waive up to 10 lakh. But let's say if I do another 10 lakh in digital in times like this, can you give me for that next extra 10 lakh something which is probably half the tax, 1/4 the tax, and can you have this cascading kind of a model where more I do, more I digitize, which means I'm actually complying, I'm paying more tax, I'm helping government and the economy to grow. Can those benefits come to us? So that's what we have been talking. We personally believe fundamentally zero you multiply to anything results in zero. Now, of course, fintechs have a lot of ideas. They're trying to cross-sell many services. But we also believe, I believe that this government has thought that subsidies are not good. We have to be sustainable model. And we've all been trying to build that sustainable model. And that's what we have been demanding. I think we continue to demand that. We continue to work with the government as well as with the other stakeholders. That said, I'm not saying there are not enough opportunities to make money for entities, but why shouldn't there be? They are all in the business. Otherwise, we should declare this industry as not-for-profit industry, and everybody should be not. So that's our view, and I think we have been continuously taking it up, saying that it has to be market-driven. Interestingly, this has been seconded in all the reports that has come so far, whether it's a Vatal committee report or the report. Everywhere it is written that it should be market-driven.
How hopeful are you of getting the government to that middle path?
Well, we have no choice but to be hopeful, and I think we have to solve it for the industry. Well, unfortunately, in issues like this is a principle. You could create a trade-off, you could find a solution, but fundamentally, you have to align on a principle that is free ever a right thing to do in any work or any business. Well, it should be a choice. Even if an industry or a player wants to do it, should be his choice. It should not be a law that you can't charge. I mean, then somewhere I see a violation of a constitutional right. I mean, if you have a right to do business, you should be able to do it on a terms, as long as they're fair, as long as they're not oppressive, right? And then leave it to the players. Now, there are players who may give money actually to transactions. There are players who may not charge. There are players who are doing a job which others are liking, and they are willing to pay them, let's say, a percentage or a half percentage or 2%. Why should they be denied? There should be a choice. I mean, I'm a big follower of Milton Friedman, right? He always said that in economies which are developing and you have a divisions and you have inequalities, the only way you remove the inequalities is increasing competition and giving choices. Not giving choices, removing choices, create problems.
But some of you are even looking at an IPO in the next couple of years. So clearly you have to convince your investors as well. So, and need to have a clear business model in place. So one of you can perhaps answer this, Samir or Harshal or anyone. How do you look at monetizing payments if there are constraints like this, regulatory constraints like this?
I think echoing what Naveen just said, right? I think it's a principled stand, and there was a subsidy model in play for a couple of years before that. While it was welcome, it was not something that the industry ever asked for. The industry wants to do open market pricing. The market is definitely absorbing the cost, and it is, by the way, UPI as it stands is probably one of the cheapest cost sort of models that there is for digital payments worldwide. So it was already highly sort of economical compared to any of the other sort of developing markets. You go out into any of the other developing markets, a small merchant typically pays more than the large merchants who negotiate better rates. So in fact, if you go to a food truck, even in a market like the US, it's not atypical for the food truck to be paying 2.5%, 3%. UPI was already capped. The RBI already had caps that were at around the 65, 70, 80 basis points. So I think first and foremost, it's unclear even today, 9 months after that, why the government feels that everyone in the private industry is going to keep going further and further into the heartland, taking on more and more regulatory burden, do KYC, be accountable to the ombudsman, have to have nodal officers, grievance officers, have to actually pay penalties on risk and fraud, keep doing all of the work that you do in a for-profit industry, keep getting better thing in terms of regulation, governance, compliance, but not charge. I mean, that is the part that is baffling, because we don't want subsidy. We never asked for the subsidy. As I said, I really appreciate that Mighty had given it. But at the end of the day, like a company like us, we have about 8 to 10,000 people on the ground today, and we've just reached tier 3. We recently announced, like, our hope or plan is that we actually can go all the way where every telecom player has gone and every Parle G biscuit and Tata Salt has reached. It's going to take another 15, 20,000 people. Now, we are supposed to be empathetic employers in times like COVID. We've not fired anybody till date during the lockdown. We've kept our entire sales force even when they couldn't leave the house. That's a principal stand. When the market opens up, they're back on the ground. We've had over 50 cases of people in the sales force who've had COVID. They are working for the last 4 months. They're hardworking people. They want to go and service their merchants. The merchants need help. We want to help. Everyone on this call is trying to create or grow the market. And the beneficiary is the market and the consumer and the merchant. You can't grow a market when one side of the ecosystem is not happy anyway. So if the merchants were not adopting digital payments, the pie would not be growing. It's that simple. It was growing. It has been growing year after year after year. That's one part. I think the other key question we need to understand here is, pre-demonetization, India was a Visa plus MasterCard plus wallets market, right? 3 primary instruments. Net banking was very small. In that market, the top 2 or 3 million merchants or stores accounted for and still account for 90% of the revenue flows. That's just, you see the GST data, it reflects the same thing. They were already digitized. The whole idea of a UPI-based ecosystem with light QRs, light touch KYC was anyone with a smartphone, anyone with a QR code can start accepting payments. If you are saying provide services to the with a hurdle that, hey, somebody who's already earning 2 lakhs a month, I mean, that was one of the proposals. Somebody who's already earning 2 lakhs a month, 4 lakhs a month, 5 lakhs a month, you're again just going back to the same 2 or 3 million people. That part of the industry is over-serviced in my mind, right? There are dozens of payment gateways online. There were dozens of POS service players offline. That market was concentrated. We all want to go into pan-India. To go into pan-India, if you take by law any new revenue incentive, I can't even think of saying it will be free for a year or 2 years and then I'll get returns on my investment. I can't take a long view. My investor can't take a long view. Because the government saying there will structurally never be any money to be made. That is where I think we are at an impasse. And as a principal stand, I think the industry is still holding out because something's got to give you.
Well, the other big regulatory development that everybody is looking forward to is this new umbrella entity, which is going to replace NPCI. I think RBI has thrown open the doors to all the private players to come and participate. So how is this going to look like? Is this an opportunity that some of you may look at? Or is it going to create more competitors? How is the play field going to look like? Maybe, Toby, you can start off with that.
Sorry.
Yeah, I think Yeah, we're always looking at digitization opportunities, right? And so that's really a focus for us. And so innovation is really what drives our kind of strategy, and then the investments we've made into India over the last few years in terms of billion-dollar commitments, that those will continue for us. And so I think we generally support initiatives that will look at how do we digitize, but we'll have to see and monitor kind of like the details and what that really means for us. So we're kind of in this wait and see position at this point, and but definitely
Naveen, I know
encourage
you
more
are looking
innovation.
at it very closely. You want to share something with us?
Yeah, of course. I mean, I can't hear you though, but yeah, you're right. So
Go ahead, we can hear you.
can you hear me?
Yes, go ahead. Naveen, can you hear us? Okay, I think there's some issue with the audio. Yeah, let's go to Shilpa. Shilpa, how do you see, from an industry perspective, how do you see the players looking at it? I mean, do you see a lot of interest
Well,
among
I mean,
the private players?
so for one, I think it is a huge it will be a huge capital investment. So there are I think it's high barriers to entry from that perspective, because there is a fairly defined eligibility criteria and a very high capital requirement. And from a regulator's perspective, I think the two key motivations were, one, to address the problem of systemic risk, which I think, as you know, like you open the show saying digital payments in terms of numbers is exploding. So as we get to higher volume of transactions, regulator will think of systemic risk and think through possible lack of infrastructure technology. So that's one key objective. And the second is, I think, just in terms of competitiveness to encourage innovation. And I think there will be interest. I think it will require a sort of collaborative, given the high barriers to entry. But I think it's a terrific opportunity for the private sector to come in and take on this role of actually building the infrastructure for digital payments. And I think it is widely acknowledged that India does have one of the best infrastructure for digital payments.
Naveen,
So I view it
can you hear
as a
us
big.
now that you're back? You
Yeah,
want
no.
to, yeah.
Sure. So two things. One, I don't think it's to replace Visa or MasterCard or NPCI at all. I think if you go back in history, I remember when NPCI came with the same questions were being asked by every journalist, every media, that now Visa, MasterCard will have no business. The fact is, actually, all three of them have grown very well in the last decade or so. So first, we have to understand, like Samir said, that we are very well served to a top 150 million customers, if you were to take some number, I mean, give 10% here and there. When it comes to being properly digital, interestingly, the industry is very, very large. I think 1700 lakh crore is not a small number by any stretch. It's 10x of our GDP. It's growing rapidly. But at the same time, look at the opportunity next 500, 600 million who needs to be served on urgent basis. So if you have to be digital, at least of 50% of a population, that's an opportunity. It means you really have to go to hinterland. You need to go to a different segment of customers, even within metro cities and even within cities. And I always tell a lot of people that it's not that your customers are all served even in the metro cities and the rest of the cities. You actually have sometimes larger population even in those areas. I mean, I give example of Mankur, for an example, in Mumbai. You go there, it's one of the largest populated slum, probably next to Dharavi and bigger than that. Probably the large number of people there still needs to be served. So it's a very large opportunity. There are pockets. I also believe payments is always a use case based solution. It's not a product based solution. I think it's wrong for us to assume that we have one product and it will fill into every shoes and you'll be able to solve all the problems. I think it works other way around. You need to go to a use cases. I remember my earlier days when we were doing IRCTC transaction, you needed to get into a different customer. Uber is a different kind of a customer. So every customer is different. Every use case is different. You could use the same stack, same platform, but you have to fine tune and tweak that program, which means you need innovation. You need more participation. And I think that's where RBI is looking at expanding the market. And we believe that my personal belief is that, I mean, of course, I'm seriously interested, but there will be at least 8 to 10 serious applicants. And hopefully this will expand the market from current 15% digital to maybe about 50, 60%. Maybe a decade and a half, that's what it will take. But that is where actually we will really start seeing our vision of digital India also coming true, because without digital money, digital India cannot happen, digital economy cannot happen. So I personally see it as a very important move from RBI, very good one. Actually something which will benefit even existing players, because they all have to interoperate, they have to all work together. So it's actually going to grow the industry rapidly.
So something like a digitally Atmanirbhar Bharat we are going to make.
Well, that, I mean, I don't want to be political. I think we fairly are in some areas, in some areas we are not. For example, oil will never be, right? So it depends which fence you want to see.
Sure.
Till the time we have a different ecosystem of electric vehicles, etc. So yeah, but in payments, well, we could be if we take again few more steps like digital currency, for an example. The central bank issued digital currency is a very hot topic. Maybe some of these NUs can bring in some models, which could be interesting to kind of do some work in that area along with the regulators and government. So there are plenty of opportunities, and we need to do something.
Romita?
Right. So, I mean, going back to, when you're talking about digital India, now a lot of the discussions we hear around the digital ecosystem is focused on smartphone users. But we have around 350 million people on feature phones, on 2G networks, and in general, telcos, Googles, Facebooks of the world are all trying to look at ways to convert these people into internet users. And I'm sure this is also an extended market that you are also looking at. Now, what I want to understand is how can the fintech ecosystem developing a more inclusive payment solution for people across, say, rural India, across the migrant labor force, people who are largely feature phone users. What are the current challenges in bringing these people into the digital payments fold, and how can we possibly look at developing solutions for this base? I think I would like to throw this question to Harshal first. How do you see these kind of solutions developing?
Yeah, well, thanks. I think the way we look at it is that, as everyone said, that we have so far built solutions only for the top 150 million consumers, and as we go down, there are different kind of solutions needed. I think UPI was a very strong step in that regard, that it brings digital payments available to customer base who doesn't know how to use a debit card, who has never used a credit card, but is using a smartphone and can download a UPI app and basically connect that. So from an infrastructure perspective, I think UPI brings us that infrastructure that everyone with a smartphone is at least reachable, which is a good percentage of the population, which is still not started using digital payments. For going below that, I think we'll need to build other form of payment instruments. And one conversion that keeps going around is that a UPI equivalent for feature phones. And there have been steps in that regard, and PCIs and a couple of those players have been working on that. But I think going back to the earlier point, I think having more players participate in that conversation will end up being the best driver of this. Because while the government can think and launch one instrument, launch second instrument, but the best innovation comes grounds up, right? So if you have, let's say, if you have an NUE equivalent, which is doing similar stuff as NPCI, targeting a different base of population, when you have an open market where people like SME, people like us can work towards building different solutions, I think that's when you have ground up innovation, and you need to have the right incentives for that. I think as long as you leave the market open for that, as long as there is a sizable base to target, people will build solutions towards that. And we've already seen some of those things happen. I think UPI in the state, it was originally launched, and with QR and some of the other things that happened with the launch of AutoPay, the shape that UPI has taken up now is very different than what it was originally launched for. And it's targeting a very different set of customers, very different set of use cases. And I think that is going deeper and deeper as the market keeps evolving. I think the only thing that the government can do is provide more incentives for things like NUE, things like promoting more players like us, which could end up building more of those solutions. And as long as the market is open and competitive, these solutions will come automatically.
Got it. Srini, what do you think about this, especially in terms of taking these solutions to rural India, extending these to rural India? What do you think the ecosystem needs right now, and is there anything we can do at present?
Yeah, I think 2 or 3 parts to the answer, right? The first part is probably I look at it as glass maybe 70% full. What I mean is the rate at which you have smartphones growing and therefore data consumption and therefore the ability to download apps is a good sign. But as you rightly said, probably 20, 25, whatever percent are kind of still excluded from downloading an app and accepting payments. So for starters. We work in 40 odd countries, and if you look at Africa, for example, where we see a lot of stuff happens using feature phones, and there pretty much payments means it's digital outside of cash, which is through the phone. Where you have something called USSD based transactions. And that's something that by the way, it's been implemented in India too. It's just that we've not seen adoption. I was seeing some statistics. The number of transactions probably has been languishing at something like 0.1 million transactions per month, which is nothing at all. So that's one probable area rather, where you could kind of build in some awareness and ensure that even through a feature phone, a USSD is nothing but like an IVR, which is text driven and very intuitive for people who are number literate. You don't even have to be literate. So that's one opportunity. But the third point, which I kind of see, which again, we've seen some good progress, while you may not call it payments, but access to finance is what I would say. Look at APS. Through the micro ATM network, something like 2.5 lakh ATMs out there in the micro ATMs out there in the market. And during the lockdown, that's one. I mean, even when UPI was down, what went up was APS. So probably having a combination of all of these three things, pushing for apps where possible, to awareness for the USSD based transactions for the number literate and feature phone users, and three, giving having the ability to access cash even during these times.
I just wanted to add one line that see, the issue is not technology here. It's about right fitment of the product use cases, right? It's technology already exists in the segment. I think we need to bridge that, right? So sometimes we take a X service to someone using a third technology. That combination is not working. I think that fitment is what is getting worked on. You will see a lot of changes.
Absolutely. So now as we wrap up this session, I think I would like to throw one of the user queries to the panel. There is a concern that the kind of growth that we have seen in adoption of digital payments and the adoption of the digital ecosystem might not be sustainable in the long run, given once things normalize. Given the assumption that things will normalize, if they do normalize, how sustainable do you think it will be? And do you think this growth, the V-shaped growth that we discussed, can it go back to where it was once things go back, or will this be how things go on, going forward? This is the pace at which we continue to grow. This is the pace at which digital transactions continue to be adopted in the country. I would like to throw this open. I think I would start with Shilpa, and then we can go to everyone else.
I think one big game changer is going to be how we use and protect data. And I'll tell you why that is. Two key aspects. One is, I think data protection is critical in building consumer trust. One is my appetite as a consumer to engage with new technology and fintech products is, I think, linked to how I feel my data and my information is protected. And I think that's one big gap. There is no framework right now. There is a bill that hasn't yet been passed. And I think it's critical that we have a framework to actually set out how data is used and stored and processed. And I think the other aspect is not just consumer protection. This is something that Samir mentioned earlier. From a risk, perspective, I think in terms of access to product, for example, I'll just give you an example. If you have a local vegetable vendor who uses payment solutions, and he's now sort of in the fintech ecosystem, you can actually use that data to customize other solutions for him. It could be credit, it could be loans. So it's important to give fintech access to data, but as important as it is to protect that data. So I think it's critical for the data regulation to strike that very fine balance between protecting data and giving fintech access to data, which is what they do best. I mean, but they can access non-traditional data points and customize financial solutions and create new access. So I think data is going to be the next big game changer for fintech.
Absolutely. Toby, how sustainable do you think this is, and what would be the challenges? No, Toby.
Was it for me?
Yeah, so I think the big game changers, I think for us, I think we will see the growth come back. I think we're still in a cash economy. And in the end of the day, what I always think about is like, are we solving the problems? And I think we talk so many use cases today. And if those use cases ultimately become more convenient, I think many of those will stick, right? If I'm actually able to say like, hey, can I do my groceries on a social platform, or if I have a contactless experience, we actually have never really seen people revert back from some of these experiences because they're safer, they're more secure, and they ultimately actually create that experience and that value. And I think that's the mission that we're on, is to say like, we deserve the long-term growth if we create that sufficient value, that experience, and ultimately also the economics for all the stakeholders to succeed.
Right. Samir, what challenges do you see here? Or do you see challenges at all?
Well, one, I think the growth is irreversible. It's like having your first casual Friday when you work in a bank and you take off your tie and people say, this is just a casual Friday. Then there's this a holiday on a Friday and it becomes a habit. And 6 months later, everyone starts saying, I'm never wearing a tie again. It becomes a habit. If it's more convenient, it's going to become a habit. Toby's point, I think digital payments, especially I think mobile payments, because you carry your phone along with 50 other things in your daily life. Once you start making contactless payments, A, it's safer, but B, it's just flat out more convenient. I don't need to have cash all the time. I can't remember the last time I went to an ATM, honestly, and that's refreshing. I think on the data side as well, I actually only see opportunity. I'll take a slightly contrarian view. I think privacy is very confused. I think it's overhyped. We take all the sensationalism around it off the table. The problem to solve for is data security and data sharing. That's what freaks people out. Risk and fraud stems when people don't secure their PIN or their own device. And when companies share data without permission, not capture. I think one of the things I'm worried about is there are so many versions of the data privacy bill being discussed. The worst thing India could do is start saying, don't capture data. That's not a desirable outcome, because then you can't innovate with that data, whether it's financial instruments or loans or insurance and other products that people desperately need in a market like us, or it is building better bureaus so that people are held accountable, or it is offering better applications and services. Data is very, very critical. What's important is the rules of engagement between the consumer and the business. What is not important is this whole noise around everyone's scared because their data privacy is getting violated. Compartmentalize it. Is your data secure? Is what you thought is being captured, nothing else? And is it being shared with or without your consent? If the answer is it's being captured with your consent, it is secure and it's being used only by the entity you gave it for, we should stop there. To suddenly start saying it should not be used for things that you've not imagined yet is to, by definition, say you can't innovate forward. Then it's not a data economy. And I think that is a very important point. Right now, it's missing in the draft bill that I've read. I hope they capture the difference.
So I think a quick query, I would throw it to Srini first in terms of what fintech solution do you think is going to define the growth of digital or of fintech adoption across the country over the next 2 to 3 years? We can't hear you.
Mute.
Yeah, am I audible now?
Yes.
Okay. I was saying we've been talking about payments till now, and Surya was mentioning probably anywhere between 15 to 20% of overall payments would be through electronic stroke digital channels. So that itself is a huge opportunity. And as and when you keep, as somebody else was saying, it's an irreversible track to kind of following, and it's only going to increase. It's a question of how fast will we grow. Having said that, payments is just one part of the overall financial services life cycle for anybody, right? Be it a customer or a business. We're talking about needing of loans. It's about how do I track what is happening to me? How do I grow my money? So there are a lot of other aspects. And one regulation that RBI has come out with, which I genuinely believe has yet not been by all stakeholders, I don't think has been given the due importance, including the forming of an SRO there, is the account aggregation. Because the first time we've seen multiple regulators coming together and say, how do I aggregate data? And data, by the way, is the new oil anyways. And using that, if I were to look at customers, the personal financial management, the basics, how do I give better loans because I have better data? How do I help them track and save and grow? And if you were to look at SMEs, the ability to interface to a GSTN network, what and the new framework and guidelines as far as APIs are concerned, and then getting a full view of the businesses, especially the MSMEs, would suddenly help you bring in a new digital revolution. And I believe that is something to really stay focused on and probably watch that space is what I would believe.
Okay. On that note, we will end the edition of Pivot Perish. Clearly, as the name goes, either it's pivot or perish, but clearly the fintech industry is here to pivot to greater heights. Of course, there are challenges, but clearly this is a recovery which is going to be well supported by the fintech industry. Thank you all for joining us in this very enlightening session. Thank you and stay tuned.
Thank you so much.
Thank you, everyone.
Thank you.
Thank you.
Thank you.